All right, well, it is 9:30. I want to be respectful of your time, JJ, and all our guests, and want to thank everybody for taking some time out this morning. Appreciate everyone being here today. This is our third webinar in our series, Experts in Business. The Experts in Business webinar is a business leadership and professional development webinar series consisting of one-on-one Q&A sessions with successful business owners. We want to talk about how they became experts in their fields and how the participants can as well. Each webinar is going to have a wealth of kind of practical, actionable advice from a leading CEO, thought leader, founder. And our goal is really to give the participants access to invaluable content from accomplished executives. We want this to be a resource to you. We're thankful again for having you here. And I wanted to introduce we're very excited. This has been a long time, I guess, in the waiting. JJ, thank you for being here today. Really excited to have you. JJ the CPA, as he's known, has been a CPA for several decades. I got connected to JJ through another CPA contact of mine here in the Los Angeles area, who said that, you have to watch this guy. He's really great. He's resourceful, a real expert. And, 2 months later, I'm a very avid follower of his YouTube. He's a social media maven, to say the least. But his level of thought and expertise and caring for people is amazing. His level of information on his YouTube videos, which seem to come out, I feel like, every 5 minutes, because it's been the nature of the beast of information flow in the last 3 months. It's necessitated that. So without further ado, JJ, thank you for being here with us today. We're very excited. Thank you.
Well, you bet, Hugh, and thanks for having me. I know that you reached out, like you said, a couple of months ago, and I really appreciate the opportunity to prepare. We're in a unique time right now where we might be seeing a little bit of repeat in history as the numbers are going up. And so I do look forward to visiting with the group that you've put together. And again, thank you for the opportunity.
Thank you. Well, without further ado, let's get started. Can you give our participants a little bit about your background?
Yeah, you bet. So Joshua Jensen, CPA. I'm out of Oklahoma City. Graduate of Abilene Christian University in Abilene, Texas. Started my career in Dallas. My grandfather, who practiced for over 55 years out of Agora Hills, California. I wanted to do what he did, and he said, well, out of college, go work for a large local practice and get out on your own. So I did just that, started my own practice at age 25 when I knew everything, right, Hugh? And so I've had my own practice over 27 years, and over 23 years. I've got over 27 years. And my background has really been in tax, working with small business owners and their businesses, which encompasses really S Corps and partnerships, LLCs, and kind of the intricacies of that planning that comes into play. And then a couple of years ago, I set out, maybe more for fun, believe it or not, to build a presence on social media. Probably for the last 10 years, 15 years, my clients have gotten to know me as JJ the CPA, as one of the clients coined that. And then I kind of took it and ran with it. And then really through our crisis that we've been in, I had put together videos really just for my clients on YouTube, even though I'd been doing videos every day for a year. Or 2 years. And I guess I was the only one, Hugh, that was putting info out there related to PPP. I ended up building a community website, just a community service for free, JJ the CPA Help. Nothing's for sale. No one gives me their email address. But it was putting together schedules and worksheets and videos for my clients because I couldn't communicate with them fast enough. And then it took off from there. And I think we're at almost 2.5 million views since about the CARES Act on my YouTube channel. So very thankful for that, as well as the other social media. And so if you don't mind, I'll just indicate to those that are tuning in, feel free to look us up. You can look on any social medium. Just find JJ the CPA, and that's the same name for my YouTube channel. And again, I'm not doing any of the social media to sell anything at this point. It's just helping people, kind of like what you're doing here, Hugh.
Yeah, I agree. I can definitely be a testament to that. I've watched numerous videos that you've put together.
Thank you.
For me, I mean, just being able to have that as a resource to get a much better understanding of all this information that, frankly, is, as you know, is very confusing, has come out. It's been a flood of info, and it's my job to help break that down for our clients and for anyone, frankly, that needs the better understanding of what it all meant, what it means, what are the ramifications going forward. So it's really been helpful. Thank you for that. You've
Well, you
already
bet. Thanks for tuning in, by the way. Yeah.
yeah, no, I'm sure you're going to have some more people after today, after we finish here. You already kind of started to discuss your social media. How have you, how have you leveraged it? I mean, social media is extremely, it just dominates our lives now, and you've really found a way to have a voice on it and be a very genuine voice. Can you talk a little bit about that?
Yeah, and I appreciate that. From my perspective on the social media that I'm putting out there, I'm focusing in on what my clients are dealing with at that time. And so I'm using that, for lack of a better word, as the inspiration of what we're posting each day and the videos. So I think it keeps it relevant. I am providing, I think, enough information where those that are tuning into it or reading the posts have a little bit more to then ask their advisors, or if they don't have advisors, what they can go and look up. I'm not really trying to provide much do-it-yourself, even though through PPP, I really did break that tradition in the sense that I was providing worksheets and applications and how-to videos. And from my perspective, I really have, Hugh, a long goal with social media. I felt like if I could build a reputation as a quality CPA that isn't there just to sell anything, which is, like I said, I mean, if you don't mind, I mean, the only thing that's for sale right now is my book that you can find on Amazon.com. It's $12.33. I lowered it as far as I could go. In this book, and the reason I even point the book out, Hugh, is that this probably really represents the social media, this is the top 60 questions of my clients over 27 years. And it's enough information for them to come talk to you, Hugh, in the sense that they already have an advisor. There's probably some questions that they have. They either don't know what to ask, how to ask. Sometimes advisors might make assumptions that the client already knows some of these things. And so my point in saying all that is that I think part of the genuineness is that it's basically posts that my clients would probably get something out of, although quite frankly, not a lot of my clients follow me on social media because I'm fairly hands-on. But then I would say it's being consistent, and part of what I had learned before I went onto social media, I had about a year's worth of looking at what did I want to do, what kind of image did I want to have, what was my goal, and I wanted to find an area that really a need wasn't being met, and I really felt like that was just a CPA working with small business owners and then being the face a little bit of the CPA industry. And so I travel around the country and talk to CPAs from New York to Seattle to Denver to you name it, Atlanta. I've been to over 50 cities just in the last year and a half on behalf of a great company called Surgent, doing continuing education, and then doing some interaction with CPA candidates. And so I think trying to be the face of the CPA industry, because there really isn't one. And then really the long goal here, just in closing on this part, is that if I can become somebody that's a trusted voice, then if there is a later time that I provide an opportunity maybe to do some consulting, or I write another book, or maybe there's some businesses that I could be a spokesperson. I felt like if I built a reputation first, then if I came into a situation where maybe I was providing a way to, for lack of a better word, make money, it would be after I'm known as a trusted voice. And then once people find JJ the CPA, I felt like, and with Amanda's help, who's behind the scenes, that someone would find there's a consistent approach, image, voice, advice. And so if you even go back to May of 2018, a lot of what you're going to find now has already been produced. And so I think that's the biggest part, is consistency and providing enough information that you don't get sued, right? We don't necessarily need to give them all the phase outs, but enough information that it's helpful that they could either go and find how to do it or get with their advisors and better work with them.
That was great. Thank you. Yeah, the consistency message. And I can again attest, you do that through your YouTube videos
Thank you.
constantly. So thank you for that. Well, there's a lot. There's a lot of meat here to discuss. So we'll get into it. Can you kind of give us the latest update from PPP, SBA? You know, all things all things considered.
Yeah, absolutely. And if you don't mind, I'm definitely going to give an update. On my YouTube channel, I have various playlists that are broken up into self-employed and employers. And I have playlists that's for self-employed with PPP forgiveness and step-by-step how to fill out the application. And then for employers, same thing. And then because Saturday night, Trump, obviously, Congress put this together, but Trump signed into law the extension of time to get PPP to August 8th. And so I also have playlists on that. And then this is zero true promotion because I don't get anything out of this, but at jjthecpahelp.com, again, all community service, I've got a page that just has the latest info from the SBA, as well as a self-employed and an employer page with worksheets, as well as kind of key videos. All to say this, as you indicated, I mean, goodness, before March 27th, which is when the CARES Act came into play, about 2 weeks, 3 weeks before that, we had the Coronavirus Families First Tax Relief Act that had a couple of tax credits that came out of that at 3 different levels. And we'll cover that here in a little bit, Hugh. But as it relates to the PPP right now, if you already got it, this doesn't now allow you to go and get more. In my opinion, though, after August 8th, this is just pure hunch, that I think there's still going to be billions left. Right now, I believe there's still 130 billion available in the PPP pot, so to speak. And I do feel like, based on what the Senate was talking about and the House when they were looking to extend the Paycheck Protection Program, there was talk about getting more for small employers, 100 or less employees that can also then demonstrate that they did have an economic effect, where potentially you're looking at, well, what were your sales during the COVID shutdown compared to a prior period in the past. And all to say this, that didn't come to fruition, but it sure seemed like it gained a lot of ground in the Senate and the House. So I think we would definitely want to be paying close attention. I think it'll provide an opportunity for some of the businesses that are having to shut back down, or maybe move backwards to a phase 1 where there's limited capacity. I know in a number of states they're maybe approaching this differently, meaning they're not shutting down, but they're requiring the social distancing, the face mask, and put into play, which is all to say it seems likely that there is going to be a sector of businesses that might need another round of PPP money. I know that with the EIDL, so the Economic Injury Disaster Loan, we all know that it did run out of money. And then in round two, when they upped the funds or put more funds into PPP, late April, they also gave only 10 billion, but they gave 10 billion to the SBA for the Economic Injury Disaster Loan. So the thing to note here is there's probably a lot of small business owners, self-employed, that got the PPP. There's not as many that took advantage of getting the EIDL. I don't know when it's going to run out because there was only 10 billion where I believe it was 660 billion put into PPP. The SBA has pretty well limited here as of recent the EIDL loans up to 150,000. There doesn't seem to be yet that I can find a true rhyme or reason for how much they do approve, but it is available for the self-employed as well as the employers. And you go to sba.gov, and at the top there is a yellow strip that says COVID-19 relief. You click on that, and then it says apply here, and that's where you answer just a handful of questions about your business to see if you qualify. A couple of things to note on that is that with the EIDL, as you're applying for that, that is when you check a box to indicate you'd like to be considered for the EIDG. What's that? That's the Economic Injury Disaster Grant. That is up to $10,000. It's $1,000 per employee. It seems as though the self-employed are not getting any of the grant because they don't have an employee. What you will find is that you might get the grant and not ultimately qualify for the loan. This is the EIDL. You may qualify for the EIDL and not get the grant, most likely because you're self-employed. But from the perspective of getting relief, I do go live on my YouTube channel Mondays and Wednesdays at 4 p.m. to just simply answer questions. But one of the recent questions that seems to be recurring is small businesses are getting approved for the EIDL for an amount that they are thinking, you know what, I don't know that I need that full amount. But then they're regretting that because with the EIDL, the first 25,000 requires no collateral, no guarantee. Above 25,000 up to 2 million, but right now they seem to only be going to 150. It does require you to provide some collateral. But what I've recommended to my own clients is there is no payments required for 12 months. It's over 30 years. It's a 3.75% interest rate. And part of the litmus test, if I could say that, is that if you're hawing about whether or not to get it, then don't, because it is debt. Your house must not really be on fire, because for those businesses that their business is on fire, they're not sitting around contemplating, well, should I get 25,000 or 50,000? For the clients I'm working with that are in a disaster mode, get as much as you can, because you can pay it back at any time. There's no prepayment penalties. Look at it as a cushion. And if you're in the mode of, well, I don't know if I want to take that much because there is going to be some interest accrued on it, well, clearly your house isn't on fire, because with the EIDL and the EIDG, you're able to use it only for ongoing operating expenses. You cannot refinance a loan or go and pay off a loan or a line of credit. You can't buy assets. You can't pay yourself back if you're an owner that's put money in. This is for truly ongoing expenses. But Hugh, check this out. Even if you have monthly loan payments, now they have to be in the business name. It can't just be something paid by the business. It has to be a loan in the business name. But EIDL as well as the grant can be used to make monthly payments because that's an ongoing expense. But the reason I'm going over to the EIDL and the EIDG is that I would say for every business For every 10 businesses that got PPP, and this is not a statistic other than just a hunch based on the interactions I have with my own clients, but I would probably say for every 10 businesses that are getting PPP, I think only 3 or 4 are getting the EIDL. Now, that may just be that you have to pay it back. Your house isn't in a blazing 3-alarm fire. But at the same time, I just released a video over the weekend that indicated, how do you know, though, what's coming up? And with the EIDL only having 10 billion, when is that going to run out? And so if you anticipate that you may have a very common, or not common, that you may have a very similar experience that happened from March 13th to whenever your state allowed you to open back up, which for many was not until May. I want you to think, as a small business owner, what's that going to look like if you don't have the Paycheck Protection Program helping you? What's that going to look like if you can't get a loan? And Hugh, one of the things I've talked about before I got popular, for lack of a better word, on YouTube, was that you cannot count on your credit regardless of what you think. You could pay off that credit card every month and be best friends with your banker and take them to golf and go to soccer practice with each other's kids. But right now, banks are having to reevaluate their own loan standards in the sense that they are only going to loan to a business that they feel can be paid back. Relationships at this point start to go out the window because of banks' reality. And I talk about it in this book, in several chapters. The bank's reality here is they need to get paid back, period. They're not going to loan to a business that only survived the last closure due to PPP or an EIDL. They're going to look at, well, if those things are absent, are you going to be able to pay us back? So I have clients, Hugh, that are wealthy. We all do, right? That are having their line of credits limited, frozen. Okay, I'm talking about people that don't even really have anything on their line of credit. I think a lot of people get egotistic, they get overconfident, and they think, oh, no, that won't happen to me. I won't have my loans reduced. Why am I saying all this? For somebody that could have their house on fire a month from now, if we have a rollback and shutdowns, or you have people that are unable to come to work because they have COVID, who knows where we're going. So this isn't admitting to yourself whether or not you feel we're in a full disaster that someday they'll make a movie out of. If you really feel like it's a media hoax, or you don't think it's really going to happen to you or your family or your business, okay, but what if it does? So the reason I'm saying all that is that I feel like with the PPP, they are going to probably have a ton of money left over. There's going to probably be another round of it, but there is going to have to be some additional qualifications to be able to get it. So it won't be necessarily just as easy as it was. The EIDL is going to dry up. When? I don't know. And then banks are not going to be offering the same amount of loans. And I'll just admit to you personally, personal experience, and it's because I did a full video on it. I have very excellent credit. I don't have a lot of debt. I do have a line of credit that has a few bucks on it. I've been with American Express for 15 years, never missed a payment. But I got a notice that my credit limit was now whatever I owed at the time. And I could make payments on it, but then my credit limit would reduce with it. I'm telling you right now, even though I told that to clients, like, no, I've been with American Express for a long time. American Express has done this in the past 2 different times where they lowered. Why? They're there to protect themselves. They're not there to be friends with whoever the borrowers are, the same with banks. So with PPP, with EIDL, and with your own bank, as well as credit cards, you need to be thinking ahead. And I'll close this little the questionnaire, by saying that the SBA has been extremely active. And I feel like sometimes they got ahead of themselves and they had to course correct. And I've not faulted them for that, because I think they've tried really hard to stay ahead of this. But I think what you would really want to take a look at is the latest on the forgiveness, and I'll let you lead into the next question on this. But you really want to now also look at the forgiveness in terms of how much will you have to pay back. The PPP Flexibility Act really opened this up to where there's going to be many businesses that are going to get that full forgiveness. They then won't have to pay any back, but you definitely want to get your arms around that. So normally, Hugh, probably similar to you, I'm kind of debt adverse. I think debt can be good for a leverage. I don't tell clients to run out and borrow money from their line of credit even when they don't need it. But at the very beginning of this, before anybody was paying attention to my YouTube channel, let's say, I was telling clients, if you have a line of credit, maybe you need to pull a little bit of money off of that, even though you don't need it right now, because when you go to need it, it may not be available to you. So as much as everybody wants to guarantee themselves that they're going to have a line of credit, every provision, and I've talked with bankers about this, every loan you have, every line of credit you have, whether you believe it or not, has a provision in there that if the bank, becomes concerned about your ability to pay back, it's not that they will necessarily call the note, but they're not going to necessarily let you keep pulling money off of it. So we really have to think ahead. We can't have our head in the sand. We can't pretend like it's going to be okay. I don't think we have to pretend like it's going to be disaster. Right. But being a Boy Scout from my childhood, what's the number one thing? To be prepared. How do we need to be prepared? Taking advantage of the relief. And if you pay it back because you didn't end up needing it, at least you had it available to you. Yeah,
That's an excellent, thank you for that. People should, the video, one of the videos you were just alluding to, specifically was talking about the 7/15 deadline that's approaching. But the bigger issue or the bigger point you were trying to get across is what you just said, is be prepared. Do the homework, look how the first 6 months of the year went. This is, what we are doing right now with our clients, with the business owner clients, and you're doing with yours. You need to really look at what that was like. What do you think it's going to be like going forward? Unfortunately, you may have to prepare for the worst if there's a shutdown again. But to your credit, be prepared. Have that plan in place. These measures are out there if you need it, and you can pay it back. So thank you for that. I know this. You brought this up on one of your videos, and I thought it was kind of interesting. This is a quick question: what if you got too much PPP money?
Yeah, interesting enough on that, I was very curious on how the SBA was going to react to that. But in their latest set of guidelines that came out really just about a week and a half ago after the two applications for forgiveness, they indicated that very clearly, if you got more than what you qualified for, assuming it was inadvertently, assuming you were relying on maybe the bank's advice, and you then got too much, that you're just going to simply have to pay it back. If you got it before June 5th, that'll be over 2 years. If it's June 5th or after, it'll be 5. I do know there are banks already indicating to their customers, even though they got the PPP funds before June 5th, that they'll do the 5 years. But when you go to the application for forgiveness, you're listing your loan amount. And then for self-employed and owner employees, there's very strict amounts that you get to include in your forgiveness, as well as then the payroll. And so from the perspective of how do you know that you got too much, you have to look at the original calculation of what loan amount you got, and then what amount of expenses that you're being able to include. But the long and short of it is that you're able to pay that back. And Hugh, I think what I also just want to quickly cover in that forgiveness is, we do know out of the Flexibility Act, you can elect the 24-week option, or you can use the old 8-week option. I'm telling all of my clients that as much as you're concerned about it and you just want to get it over with, I tell my clients, you need to get over that. You need to stop being in a set of circumstances where now you're all wrapped up in a worry of forgiveness. Now you want to, and I don't mean play games, but now you want to ensure that you can achieve the full forgiveness, because I feel like that was the entire point of the PPP Flexibility Act. So for those that want to elect the 8 weeks, well, you might be able to, and there's the paid during and incurred. So it can end up being that it technically can include more than 2 months of rent or more than 8 weeks of payroll, which I've got videos on that. But nonetheless, the SBA also came out and made it clear in these same guidelines that just came out of, well, I guess at this point about 2 weeks ago, the guidelines that came out after the 2 applications, one the normal and one the EZ. But they very specifically indicated there in writing that you can apply for forgiveness at any time. So I'm telling my clients that why not have as much expense as you can? If you have a 24-week option, I know that there's some that are saying, well, but does that mean I now have to maintain my numbers of, you know, the full-time equivalents, and what if someone leaves? And in those guidelines, it indicates that you're only required to do that up until the point that you put in the application for forgiveness. So I'm telling clients, let's just have like 12 weeks. You know, let's have 3 to 4 months of rent and utilities and interest. And why don't we just have more than enough payroll? And it's not from, well, the SBA may change its mind, because if you really follow the SBA guidelines and Congress's additional interpretations, it always has gotten better for the recipient. It's rare that it's gone backwards. I know that there are things that the SBA clarified, but I don't mind tooting my own horn, or I should say, I don't mean to toot my own horn, but it was things that I was already saying, you're not going to be able to do that. And then the SBA came out and clarified you're not being able to do that. So I didn't see it as moving backwards. But on the PPP forgiveness, I don't know why you would select the 8 weeks, other than you have created this fear, you've created a concern all by yourself that you need to hurry and get it over with. Well, what happens when you hurry and do anything, right? You miss something. And so what would be worse? To me, it would be I hurried and got it over, and then boom, it turns out that something I thought counted or included doesn't, and now I have to pay something back. And when you put in the forgiveness application, you're electing what period, and how are you electing it? Well, on the covered period that you are filling out, you simply put, here's the date of disbursement, meaning the money was received by you, and you want to verify that with the bank. And then you're adding 24 weeks to it as the date. That's your covered period. That's the way that you are indicating that you're electing the 24 weeks. So if you have 12 weeks of payroll, right, and 3 to 4 months of rent and plenty of utilities, obviously you're going to have an application that's going to show a huge amount of expense. And then the maximum that you're going to get forgiven for is obviously the loan. But what if you misinterpreted something? It's not that the SBA comes back and clamps on you, but if I'm an SBA agent, if I'm a banker, and I see that someone has, you know, twice as much payroll, or the total expenses that they have, or twice as much as the loan, the PPP loan, I don't know why they would go back and be worried about trying to question any of it. And I'm not saying let's put together an opportunity where we can play some shenanigans and maybe they'll never question it. I'm not talking about that. I'm just saying it would be ridiculous to not elect the 24-week period so that you can include more expense. Now, the one other thing I'll mention, and there's a real theme of this, if for those that are self-employed, and Hugh, let's define that. That's someone that's filing a Schedule C. They're not filing a separate return. So that's an independent contractor, a gig worker, a single member LLC that files a Schedule C. They're not filing a separate return. That's the sole proprietor. This is a beautiful thing, which is this. The calculation, if you elect the 24-week option, which is nothing more than listing 24 weeks for your covered period, that calculation for the 24-week option, first of all, includes nothing related to 24 weeks, but the calculation that you get to use is the exact same calculation used to get the PPP loan, which is line 31 of your Schedule C, which is your net income, divided by 12 months times a factor of 2.5. Well, if you select the 24-week option, you get that same calculation, which leads to full forgiveness. The only way someone wouldn't get full forgiveness, Hugh, is the line 31 that they use to get the loan is different from what they ultimately filed or are going to file with the IRS. You bet your bottom dollar that the SBA will verify that before they approve forgiveness with the IRS, because it's as simple as can be for the SBA to request that information from the IRS to verify that. That would be the only way they wouldn't achieve full forgiveness. And that application indicates, here is your forgiveness amount. Now, when that goes to the bank, and if they agree with it, which they should if you're providing the documentation as a self-employed, it then goes to the SBA. They still have to approve it, assuming they do. If you got, before they changed how you qualified for the grant, the EIDL grant or the EIDG, that will reduce down your forgiveness amount. Seems unfair, but it's just how it is, and they also clarified that in the most recent guidelines. So for me, I've ran the numbers. I don't see any advantage for anyone to do the 8-week period other than those that maybe after 8 weeks fired everybody, or after 8 weeks they put everybody on PUA because they ran out of the money. Maybe they would have some haircuts. But see, even if they have the haircuts, why not have more payroll in there? So to me, I think they kept the 8-week option in there, Hugh. So they didn't, I mean, just to be kind of frank, because they didn't want to have to redo a lot of the other explanations that they had and the rules that they listed. They were just simply able to make some clarifications about the 24 weeks. So I don't know why anybody want to use the 8-week other than somebody who has created in their own world, their own mindset, that there's somehow advantage, and they just want to hurry and make sure there's no boogie monster under the bed, which we all know is make-believe. So again, 24-week option, and then you're only required to keep your employees up and the FTEs to the point of forgiveness. So if you hand it in after 12 or 14 weeks, you're only required to keep up with that through that time period.
Great. Thank you for that. You started to allude to this a little bit in the last segment. Can you kind of discuss the dynamic of an S Corp versus a C Corp and kind of how it pertains to PPP? There was a video on YouTube you put on, it was probably in the last week or 2 weeks, of course, but you made this, it was a really important point you were trying to bring up with regards to specifically health insurance. Can you talk a little bit about that?
Yeah, and Hugh, thanks again for watching the videos, and I really appreciate that. And thanks for everybody tuning in, depending on when you tuned in. What Hugh's indicating is that on YouTube, which is free, I provide a lot of whiteboard explanations and running numbers. But I lined up side by side in a video that might have even been earlier than the video that you're referring to. And it's this. We'll just start with this. You have the self-employed and you have partnerships, and they're really treated the same, because partnerships, if you're actively involved as the partner, your income, your K-1 income, is going to be subject to self-employment tax. So you're really in this same realm as a Schedule C. And you're not able to include your health insurance or your retirement for the purposes of determining your forgiveness, which seems unfair, but since the PPP Flexibility Act and the 24-week option that I just indicated to you, well, who cares? Because you should just achieve full forgiveness. Now, when we then pop over and we're looking at the C Corp and the S Corp, the C Corp being that it pays its own tax, it's not a flow-through entity, it is just a company that's owned by owners by shares. And then with the S Corp, it's the same dynamic in that it's a corporation and has shares, unless it's taxed as a, or not unless it's formed as an LLC, then it has units, but still taxed as an S Corp. That's a flow-through entity. So it's really one difference when it comes to the PPP forgiveness for the owner employee, and that is this: it only is going to apply to wages in terms of what gets to be included in the owner compensation, if you will. Distributions for an S Corp and dividends out of a C Corp is not, even if it feels like compensation to you as the owner, it doesn't qualify for PPP loan forgiveness. But that one difference is with the C Corp, it pays the health insurance, or can, of the owners, the shareholders, officers. But when it's paid by the C Corp, it's able to just fully deduct that. It's not a fringe benefit that the officer and or shareholder has to pick up as income in their wages. And the reason why is they're not considered self-employed in any way, shape, or form. So when you're looking at a C Corp and they're looking at the owner employee wages, it's going to be up to $100,000. Now it'll be limited to whatever they were paid in 2019, divided by 12 times 2.5, which is $20,833. But with the C Corp, in addition to that, and the SBA made it very clear. So for those that think differently, go back to the guidelines that came out. They clarify it in writing, black and white. There's no way I'm wrong by saying that it's the up to $20,833 plus health insurance plus the retirement, but it would be still limited to the 2019 amounts for that divided by 12 times 2.5. Now, for the S Corp, that owner employee, it's still limited to 100,000, and it's further limited to whatever they were paid as wages in 2019 with that same calculation. They do get the retirement benefit in addition to that. Again, the SBA guidelines couldn't have been more clear about it. But if everybody would look at the paragraph that indicates for S Corp owners, it does state you do not get to include the health insurance premiums in addition to the compensation. But the SBA even makes it clear, which is what I've been saying literally since before anybody was applying for PPP. The reason is the S Corp owner has to, if they're following IRS rules, include the health insurance that the S Corp is paying on that S Corp owner in the wages. Let me say that again. The S Corp, by law, and if you're not doing this, you need to fix it, but by law, the S Corp does not get to deduct the health insurance paid on the shareholder that's over 2%. It gets to include it as a taxable fringe benefit, and that's what then allows the S Corp to deduct it as wages. So let's just think of this. Someone gets paid wages, and then included in their wages is the health insurance that the S Corp paid. Right. Well, they are getting to include the health insurance. The only caveat is that the S Corp owner is limited to the 100,000. So the health insurance that's included in the wages, well, if someone paid themselves $125,000 as an owner employee in an S Corp, well then yeah, it's going to get limited because of that. But in my opinion, it's still including the health insurance, assuming that your wages are less than the 100,000 mark. So at the end of the day, know this, that there are distinct differences when it comes to the health insurance. On the retirement benefits, there's a distinct difference, but only related to the Schedule C and the partnership.
That's great. Thank you for that. It's a really important important point you just brought up, important distinction you just brought up. You know, as you said, please definitely consult with your tax advisor on some of these things that JJ just mentioned. You know, it's just good to be, like he's been saying all along, be prepared. You know, make sure you're up to date with everything. But that's a great piece of advice. Thank you for that.
Yeah, you bet. Thank you.
Can you briefly talk a little bit about the new provisions regarding the 5-year net operating loss carryback, and kind of how, you know, how you discuss this with your clients, and how best to kind of, you know, describe that?
Yeah, you bet. So the one thing to note on this is that this applies to net operating losses that occurred in 18, that occurred in 19, or may occur in 2020, and they can be carried back 5 years. That's unprecedented. The one thing to note is that if you or your client has an NOL in 2018, the clock ticks and runs out July 15th. Originally, it was June 30, and then the IRS came out, I believe, on June 29th, and indicated that they'll allow 2 more weeks to make it consistent with July 15th. So the planning for the 5-year carryback on an NOL in 2018 runs out here July 15th. For 2019 in 2020, it can be carried back to 5 years. You're able to use a form 1045 to take that versus having to go back and amend every single year. So the 1045 has just been updated July 1st. Yes, the IRS released new rules related to this to help guide you through it. If you have NOLs before 2018, they haven't opened it up that you can go back 2 years. One of the things to look at when you have a net operating loss is that before 2018, the highest tax bracket was 39.6. So if you have some NOL in 18 or 19, which the law that we were dealing with before the CARES Act was you couldn't carry it back at all under the new law being in effect in 18. So if you have higher income, you'd want to look, well, if I take that NOL and move it back, does it help me in the highest tax bracket? I haven't had a client yet that I felt like it was advantageous because either they weren't in the 39.6 or they didn't have enough in the 39.6, or moving forward, I feel like it would be more valuable. Now, with the NOL, it was limited to 80% of taxable income with the law that went into play in 2018. The CARES Act removed that restriction, not only for the carry back, but the carry forward, to where 100% of it can be used against taxable income. Now, that is just through 2020. So for 18, 19, and 20, where the law had limited it to 80% of taxable income, it does open it to the 100%. And then in 2021, it'll go back to that limitation. So when you're looking at the NOL, I think that from my standpoint, unless you are in a higher bracket, unless maybe you were taking on some alternative minimum taxes, you'd probably want to look at that fairly careful. I'm kind of one where unless you're also a company that's just starving, or you are, you know, running through the desert looking for water, and the whole purpose of that carryback was to find a way that businesses would be able to get additional monies in their operating account.
Great, thank you. I know you had a lot of thoughts on this last question. What should business owners be thinking about now, kind of post PPP? Can you just give us some of your thoughts on that? Thank you.
Yeah, you know, and I touched on, you know, the loans and what to be keeping an eye on. You know, the first thing I'm going to say, Hugh, is that this would be the worst time to stop putting money into your retirement plan. I think that's the first thing people consider saying, well, I don't want to put any more money in the retirement plan, mostly because, like, well, I don't know if I can afford it. It's more money in my pocket. You know, buy low and sell high. I mean, if the market's down, that's when you want to get in anyways. So unless you are literally completely dry of funds, I do feel like you should continue to withhold, continue to fund the retirement accounts to be able to get that deduction. The second thing I'll indicate is that for those businesses and even individuals, the next thing that seems to go is, well, I don't know if I need this life insurance, or I don't know if I need this whole life insurance, so I want to cancel this because I don't want to pay those premiums. The whole point of any insurance that you have, car, home, life, disability insurance, any of that is one reason. It's to reduce your risk.
Right.
The reason that you have insurance is that if there's an unpredictable event, hello, coronavirus, we're here. If there's an unpredictable event, what happens if you don't have insurance to cover whatever loss it is? You're using other funds that you weren't planning on using to cover that loss. So the other part is, I think a lot of people think they can just walk back in and get whatever insurance they may be getting ready to cancel, which I feel like, which is really ridiculous. The first thing that people think they should cancel is their disability income insurance, which is the last thing they should probably cancel. The next thing they want to cancel is the life insurance. Well, as we get older, as we have health issues, the rates may be higher when you go to reapply. You may not even be able to get it. Now, the other part is related to the taxes. And so you'd want to take a look that if you've used your PPP funds and you are now paying employees that are out sick with the coronavirus or caring for those with the coronavirus, you need to go back and take a look at the sick leave that has some really great tax credits. One is up to $511 a day for 10 days, the other up to $200 a day. That is up to, meaning if you pay someone $100, you're going to get a tax credit for the $100 if you qualify for that. And then we also have the expanded Family Medical Leave Act, where that is up to $200 a day and up to $10,000 per employee. Now, if you look carefully at the CARES Act, you can still take that credit at any time, in the sense that it will reduce down your payroll costs, which then your payroll costs qualifying for the forgiveness. But if you're done with your PPP, you can and should be looking at whether or not you should take advantage of the credit. Now, very importantly, the employee retention credit, the ERC, you are not able to take that if you received PPP funds. And the IRS did come out and clarify, which I was waiting for because the CARES Act indicated that the IRS needed to clarify it. But the IRS indicated it doesn't matter when you got the PPP funds, you don't qualify for the employee retention credit. Now, the IRS has not indicated, well, if I got the credit, how do I pay it back? Right now, I would tell a client, which I don't have any, but I would tell a client or somebody, well, add it back in and pay it back with your 941. So I think you want to be looking at these tax credits. Don't be overlooking them, especially if you didn't get the PPP. The CARES Act also did away for 18, 19, and 20 with the excess business losses. And so I won't be able to really go into that because I want to touch on some other things, but just know this: if your losses were limited, and I'm not talking about NOL, in 18 and possibly in 19, there's no more limitations on that. So you'd want to talk to your tax advisor to see if there was a limit. One of the ways to know there was a limit is if you go to Schedule 1 of your tax return at the personal level and you see on the line item where the flow-through entity comes through a loss sitting there as at an even 500 grand, well, you got limited on losses. Of course, you have to have basis and be at risk. Another huge one, Hugh, is the qualified improvement property. There was a technical error when the law went into play in at the end of 2017. The error being that qualified improvement properties were considered a 39-year property, which then disallowed it to be something that could be have bonus depreciation on it. So bonus depreciation is whether it's new or used, and you get 100% write-off of that asset. Now, qualified improvement property, very clearly defined as non-structural part of a building, not rugs and light fixtures. I'm talking about interior walls. So it has a 15-year property and can be bonus. So one of the things when I'm traveling around the nation talking to CPAs is they'll say, well, we don't want our clients to bonus it anyway, so we're not going to go back and make any changes if that happens. That was before this happened. But what I would point out though is, yeah, but it's on your depreciation schedule as 39-year. So you can fill out a form 3115 without then having to go back and amend your return. The 3115 indicates, well, here's the depreciation that I could have took. Here's the depreciation that I did take, and the difference you then get as the additional deduction. Some other real quick things, the business interest, if you are a business that's over 26 million, your business interest was limited to 30% of adjusted taxable income. They changed that to 50%. If you're pulling money out of an IRA, which I've counseled my clients not to do not do it. But if for some reason your house is in now ashes, and I mean your business, but if you can show that you pulled money out of the IRA related to COVID crisis, then the 10% penalty is waived, but you still pay tax on it,
Right.
Which means that you've been working so hard to build up that money that you pull out up to 100 grand is what this applies to. You're going to pay tax 20, 30, maybe 40 grand if you're including your state. Ridiculous. That means you only netted 60. It's hitting your head with a hammer. Don't do it. And those are kind of the major things. And so really the theme there is don't forget about all the tax benefits that came out of the CARES Act.
That was great. That's a laundry list there, but thank you for that. I'll remind all our participants we're going to have a summary of this for everyone who would like, that we can send that to you, because clearly there is a lot of important information discussed here in the last hour. JJ, was there any other things you wanted to bring up, or do we want to, we have a few questions in the Q&A if we wanted to start with those?
Yeah, I have time for the Q&A, but I do want to say for those that are attending, I want you to really take notice that Hugh is bringing a different kind of value to you. So whether you're a customer, client, thinking about being a client, you're a referral source, there's not many people doing this. There are other professionals that are trying to learn about the PPP because they're trying to counsel their clients in making decisions. Hugh doing, financial planning. This is a huge part of that, is knowing where our money's coming from, because when we're in a crisis, sometimes we're going to monies that we maybe shouldn't be going after to look at it. So I more just say, Hugh, huge kudos to you for bringing this value. And I don't just mean because you brought me on, you said it was the third one. No one's really doing this unless they're maybe trying to bring everybody to a restaurant and buy them a sandwich and then give them a glossy to try and sell them something. You're not doing that here. And so it is true. You're just trying to help people, and glad to be a part of the process.
Thank you. I really appreciate that. And you've been extremely helpful to probably untold number of people. Again, thank you for being here today to really kind of go through all these questions that are all affect all of us, especially, all our small business owner clients. One question on the PPP forgiveness from one of our participants: does a business have to rehire and or run payroll at the beginning of the 24-week period, or can they wait until the back half of the 24-week period to hire, run payroll?
Yeah, so my understanding on that is that if you're strategizing on it in the sense of that you have payroll but you're not wanting to include it, I don't believe you can do that. But I hear what's being said here, which is, okay, I didn't use my PPP funds yet because I was waiting to reopen. And so a big part of the PPP Forgiveness Flexibility Act was to allow those very businesses that didn't have the employees that were able to come back, or the employees that were on PUA, or quite frankly, a misunderstanding of when the PPP had to be used. So I answer that carefully to say, yes, and you can rehire, you can replace, in the sense of you'd want to look at the details, but if someone basically says, I don't want to come back, I want to stay on PUA, you'd want to document that. How? Well, write them a letter or an email and say, I'm offering for you to come back. If I don't hear from you by this date, then I'll assume that you have resigned and or not coming back. That allows you to not be penalized. Also, if your business is not doing as well and you can't afford the employee after you run out of PPP, it is okay that that employee went away. So really what it comes down to is, I would say yes, cautiously, that if you haven't used PPP funds for the reasons I indicated, and now you're going to use them, and it's in the 24-week period, I really feel like you're going to be okay on that.
Great. I think that was the only question. A couple of them, I believe, were answered within our discussion. So I wanted to again thank you, Josh, for today. It was a great hour spent, time very well spent. I know that your time is very valuable. I've learned quite a bit from you. I appreciate it. I think a lot of people appreciate the kind of work you're doing. Hope that we can find time to have you back on again. If for any participants, if you have a business that's in transition right now, please feel free to contact me, contact my partners. If you have any questions that you think about after the fact, please send them to me. I'm sure Josh will be more than happy to answer them when time permits. And again, thank you, Josh and Amanda, for connecting with me, setting this up. I look forward to continuing to follow your videos, which I'm sure will continue to come out. I want to remind everyone our next webinar will be on July 28th with healthcare innovator, investor Jason Williams. I think it's going to be really another great discussion on small business and really how to manage this situation with COVID-19. Thank you again for your time today, everyone. Josh, stay safe, and I look forward to seeing everyone soon. Thank you. Take care.
All right. Yeah, I appreciate it. Thank you so much.
Thanks. Have a great day, everyone. Bye-bye.